Silver is once again grabbing the attention of investors around the world, and this latest rally is starting to feel very different from the short-lived spikes we have seen in the past. The metal has pushed sharply higher in recent trading sessions, climbing back above the $80 level and showing impressive momentum, while gold continues to move steadily upward in the background. What is catching the market's attention is not just the price increase itself, but the speed of the move and the growing list of factors supporting silver at the same time. Investors are now beginning to ask a much bigger question. Could silver actually reach $370 an ounce over the next several years? At first glance, that sounds almost unbelievable, especially considering where silver traded for most of the past decade. But when you start examining the supply shortages, industrial demand, geopolitical tensions, and historical market cycles, the argument suddenly becomes far more realistic than many people realize. Over the last few days alone, silver has staged an impressive recovery after briefly pulling back earlier in the week. The metal had dropped into the low 70s during a short-term correction, leading some traders to believe momentum was fading. Instead, buyers rushed back into the market aggressively, pushing silver nearly $10 higher within days. That kind of move is not normal for a metal that was once considered slow and predictable. The market is beginning to behave more like a tight commodity under pressure rather than a sleepy precious metal. Gold has also moved higher during this period, but silver is outperforming gold once again, and that is an important signal for anyone following the precious metal sector closely. One of the key indicators investors watch is the gold to silver ratio. This ratio measures how many ounces of silver it takes to buy 1 ounce of gold. Historically, when the ratio is extremely high, silver is considered undervalued relative to gold. When the ratio falls sharply, it usually means silver is beginning to outperform. Recently, that ratio slipped below 60, and for many long-term investors, that represents a major shift in market conditions. For years, investors accumulated silver aggressively because the ratio suggested silver was historically cheap. But as the ratio compresses lower, some investors are beginning to shift more heavily toward gold while still maintaining large silver positions because of silver's explosive upside potential. At the same time, broader macroeconomic conditions are also helping precious metals. Oil prices have been falling, and the US dollar index has weakened slightly over the past week. A weaker dollar generally supports higher commodity prices because it makes precious metals cheaper for international buyers using other currencies. Lower oil prices can also reduce inflation pressure temporarily, giving central banks less urgency to tighten financial conditions aggressively. All of this creates an environment where investors begin searching for assets that can preserve purchasing power while also offering growth potential. Silver sits in a unique position because it functions as both a monetary metal and an industrial commodity at the same time. What makes the current silver market especially fascinating is that the industrial side of the story may now be stronger than the monetary side. Unlike gold, which is primarily held for wealth preservation and jewelry, silver is essential to modern technology. Nearly every advanced electronic device contains silver because of its unmatched electrical conductivity. Smartphones, electric vehicles, solar panels, robotics, artificial intelligence infrastructure, semiconductors, batteries, and advanced military systems all require silver in their manufacturing process. As the world pushes further toward electrification and automation, silver demand continues to expand rapidly. This is where China enters the story in a major way. Reports have shown that China imported enormous quantities of silver recently, with buying levels dramatically exceeding normal flows. According to industry analysts, China purchased more than 800 tons of silver in a single month. That number shocked many in the precious metals industry because it represented 2 to 3 times the usual volume. When a country with China's industrial capacity suddenly starts accumulating massive amounts of silver, the rest of the market pays attention immediately. The reason this matters is because China is not simply buying silver for speculation. Much of the demand is tied directly to manufacturing and strategic industrial planning. China dominates global solar panel production, electric vehicle manufacturing, electronic assembly, and many other industries that consume large amounts of silver. If Chinese manufacturers believe future supplies may become tighter or more expensive, they have every incentive to secure material now before prices rise even further. Analysts also noted that Chinese authorities have reportedly tightened restrictions on silver exports, reducing the amount of silver leaving the country while imports continue increasing. That combination creates a powerful signal that the country views silver as strategically important. At the same time, inventories in major silver storage hubs around the world remain under pressure. Warehouses in London, Shanghai, and New York have all experienced drawdowns over recent years. While there is still silver available, the market increasingly appears to be operating on what analysts describe as a just-in-time supply system. That means there is far less cushion in the system than most people realize. If industrial demand surges unexpectedly or investment demand accelerates again, inventories could tighten very quickly. This is one reason why some analysts believe the silver market is setting up for another major squeeze. We already saw a glimpse of what can happen when momentum enters the silver market earlier this year, when prices exploded upward rapidly before correcting. During that run, silver briefly surged above levels few expected to see so quickly. Although prices later pulled back, many experts argue that the underlying fundamentals never actually weakened. Instead, the correction simply removed speculative excess while industrial demand remained extremely strong underneath the surface. Another factor driving interest in silver is growing concern over geopolitical instability. Rising tensions in energy-producing regions have pushed many governments and corporations to accelerate investments in renewable energy infrastructure. Solar energy projects in particular consume enormous quantities of silver. Every large-scale solar installation requires silver paste in photovoltaic cells, and there are currently few viable substitutes that offer the same efficiency. As nations attempt to secure energy independence and reduce reliance on volatile fossil fuel markets, silver demand tied to renewable energy could continue climbing for years. Artificial intelligence infrastructure is also becoming a major long-term silver demand story. Data centers, advanced computing systems, robotics, and automation technologies all rely heavily on high-performance electrical components that use silver. Investors often focus on AI software companies, but few realize the physical infrastructure supporting the AI revolution requires massive amounts of raw materials, including silver. If the AI industry expands as aggressively as many expect, silver demand could rise significantly alongside it. The market is also beginning to acknowledge an uncomfortable reality about mining supply. Unlike gold, which often has dedicated mining operations, much of the world's silver is produced as a byproduct of mining for other metals like copper, lead, and zinc. That means silver production does not always respond quickly to rising silver prices. Even if silver prices soar, companies cannot instantly ramp up production unless broader mining activity increases across multiple industries. This creates the potential for persistent supply deficits if demand continues outpacing available material. Several industry groups have already warned about ongoing deficits in the silver market. Demand has exceeded annual mine supply for multiple consecutive years, forcing the market to rely on above-ground inventories to bridge the gap. But inventories are not infinite. If investment demand returns aggressively while industrial consumption continues expanding, the imbalance could become much more visible very quickly. This brings us back to the bold prediction that silver could eventually reach $370 an ounce. On the surface, that target sounds extreme, but proponents of the theory point to historical ratios between silver and major financial assets. One analyst highlighted the ratio between the S&P 500 and silver, noting that it currently takes around 100 ounces of silver to buy the equivalent value of the S&P 500 index. Historically, during previous commodity bull markets, that ratio compressed dramatically, sometimes reaching levels near 20 to 1. If history were to repeat and the ratio returned to those levels while stock markets remained elevated, silver prices would need to rise dramatically. Using current index values, a 20 to 1 ratio implies silver prices approaching $370 an ounce. That does not mean such a move will happen overnight, and it certainly would not occur without volatility. But it demonstrates how powerful silver rallies can become once momentum and scarcity combine. It is important to understand that silver is historically one of the most volatile major commodities in the world. The metal often experiences violent corrections even during powerful bull markets. Investors who enter the silver market expecting a smooth upward climb are usually disappointed. Silver tends to move in explosive waves, surging higher rapidly before correcting sharply and then resuming its advance later. This volatility scares many investors away, but it is also the reason silver can generate enormous gains during precious metals bull markets. Another interesting trend developing is the growing shift from paper silver toward physical silver ownership. Some investors are becoming increasingly concerned about counterparty risk in traditional financial systems. Owning silver through exchange-traded funds or paper contracts may provide price exposure, but it does not guarantee direct access to physical metal during periods of market stress. As a result, more investors are choosing to hold physical bullion directly or store it in private vaulting systems outside traditional banking structures. Supporters of physical ownership argue that the coming years could bring heightened financial instability, making direct ownership increasingly valuable. They believe the focus should not only be on return on capital, but also return of capital. In other words, investors want confidence that the assets they believe they own will actually remain accessible during times of systemic stress. What makes the silver story especially compelling right now is that multiple bullish forces appear to be converging simultaneously. Industrial demand is rising because of electrification, renewable energy, AI expansion, and advanced manufacturing. Investment demand is growing as more people seek inflation protection and alternatives to traditional financial assets. Supply growth remains constrained because silver production is difficult to expand rapidly. Geopolitical instability is accelerating strategic resource accumulation by governments and corporations. And major inventory hubs continue showing signs of pressure. At the same time, public participation in the silver market still appears relatively limited compared to previous speculative manias. During true commodity bubbles, mainstream investors typically rush into the market aggressively. Social media becomes saturated with price predictions. Retail investors pile into bullion products, and financial media coverage intensifies dramatically. While silver has certainly attracted more attention recently, many analysts argue we have not yet seen anything close to a full-scale public frenzy. That possibility is one reason long-term silver bulls remain so confident. They believe the current rally could still represent the early stages of a much larger move rather than the final phase. If industrial shortages worsen while retail and institutional investors begin chasing momentum at the same time, silver prices could accelerate far faster than most expect. Of course, there are still risks to the bullish thesis. A severe global recession could temporarily reduce industrial demand and pressure silver prices lower. Central banks could tighten monetary policy more aggressively than expected, strengthening the dollar and weighing on commodities. Technological breakthroughs could eventually reduce silver usage in some applications, and speculative excess can always lead to painful corrections. Silver investors must be prepared for extreme volatility along the way, but despite these risks, the broader long-term narrative surrounding silver continues strengthening. The world is becoming increasingly electrified, digitized, and technologically dependent. Every major trend shaping the modern economy appears to require more silver, not less. Meanwhile, supply growth remains relatively constrained compared to projected future demand. That is why discussions about triple-digit silver prices are no longer being dismissed as fantasy by serious market participants. Even analysts who remain cautious acknowledge that the silver market has fundamentally changed over the last several years. What was once viewed primarily as a precious metal for coin collectors and inflation hedgers is now increasingly recognized as a strategic industrial resource essential to the technologies driving the future global economy. As the trading week comes to a close, silver continues holding strong near recent highs, and market sentiment appears increasingly optimistic. Investors are watching closely to see whether momentum continues building into the coming weeks. If prices continue climbing while inventories tighten and industrial demand remains strong, the conversation surrounding silver could shift dramatically from whether the metal can reach $100 to whether the path toward much higher levels has already begun. For now, the silver market remains one of the most fascinating and unpredictable sectors in the entire financial world. The coming years may determine whether silver simply experiences another temporary rally or enters a historic bull market capable of reshaping global commodity markets entirely.